In September 2021, the Singapore Exchange introduced new rules to enable the listing of special purpose acquisition companies, or SPACs. And fast forward to the beginning of 2022, and the race is now on for SPACs here in Singapore. Pegasus was the second SPAC to register its prospectus with the Monetary Authority of Singapore, with units now expected to commence trading on the 21st of January. To find out all about it, it's my pleasure to welcome Mr. Neil Parekh, CEO of Pegasus Asia. Thank you so much for joining us today.
Thank you, Rachel, for having me today.
It's our absolute pleasure. We look forward to finding out more about your plans, but perhaps we can start off because Pegasus is set to be one of the first SPACs to list here in Singapore, and therefore by default one of the first in Asia. Can you share with us perhaps your journey to getting here?
Thanks, Rachel. So it's been an interesting journey. Being in the investment business, we have seen many high growth, tech-enabled companies prosper in the last couple of years with the desire to go public eventually. So when the Singapore Exchange came up with what we consider to be a very balanced set of regulations, we were interested in matching our interest in investing in these companies with the new SPAC framework that was set up by the MAS. So we started on this journey. As you mentioned, the rules came out in September, and we hope to be one of the first SPACs to list in Singapore.
And that said, as you mentioned, you will be one of the first. Why start off? Why not wait for a few others to kind of, test the waters before throwing your hat into the ring?
Oh, our belief is there's a huge advantage to being a first mover. As we may know, the first round of SPACs in this term in the US, so the SPACs done in, say, 2018, 2019, that have already completed these SPACs, have been very successful in generating strong returns for the investors. And we feel that having a wide selection of companies that all the SPACs in the first round would be of great benefit for all of us. And we like the number of candidates that we see that could potentially be de-SPAC candidates. And quite frankly, being part of the first round is a privilege and an honor.
I have to ask you then, you've mentioned SPACs in other markets. How do you think SPACs are going to change the market here in Singapore? You've been in the industry for a long time.
I think the Singapore market already has many good options for generating leads, but there has been generally a scarcity of good ideas for generating capital gains. And I think with the framework that SGX and MAS have set up, the regulators have set up, we will be able to get many high growth companies come to market through the SPAC route in Singapore. So from an investor standpoint, there will be diversity of income generating ideas as well as capital gains ideas as we go forward.
Okay, so let's get into it then, because according to the prospectus lodged with MAS, you plan to focus on businesses and technology-enabled sectors. Perhaps you can share with us some examples of what exactly it is that you're looking for.
So broadly speaking, we're looking for businesses that have a reason to exist as for providing the products and services that they're providing already to existing customers. But they're looking to use technology to really disrupt their own business as well as their own sectors, meaning they're looking to provide better products, better services at better prices, potentially for customers, institutional, wholesale or smaller businesses or individuals, which helps create value. Now, we have felt that in the last few years, there are many companies that are on the path to doing that, and some have already accomplished doing that. So those are the kind of businesses we're looking at, and we are looking at them in a few specific sectors, not across the board. So we're looking at, say, consumer tech, prop tech, financial services with the fintech lens, obviously, and including insure tech. So those are the kind of businesses we are looking at, where there's a reason to exist for the business already is established. The point is, are they able to use technology to take it to the next level. And those, we feel there are many businesses that are have already done so or on the cusp of doing so.
Any particular businesses you've got your eye on so far?
Right now, we just focus on the IPO.
We're speaking with Mr. Neil Parekh, CEO of Pegasus Asia. And that said, so Pegasus is offering 25.6 million units, each comprising one share and half a warrant. You've got a market cap of around 150 mil Singapore dollars, with the target price and date set for the 21st of January. It's a tight race. You've got a few SPACs listing around the same time. Can you tell us then, I mean, looking at the prospectus, you also state that, you know, you're a newly incorporated entity with no operating history, and you're not going to commence operations prior to the offering. And we've got quite a number of others coming into the market. Why should investors perhaps consider your offering?
I think we don't see ourselves as being in direct competition with anybody, simply because I think every SPAC has their own value proposition. From our standpoint, we are the only international sponsor in the first three. The only sponsor that has already done 2 SPACs before. We significant alignment of interest. The sponsors are putting in a total of 69 million Sing into the SPAC, which consists of 7 million of at-risk capital, 22 million as one of the largest investors in the IPO, as well as an unconditional FPA of 40 million, which will be part of the pipe that we will do when we de-SPAC. Now that's significant capital investment, as you can imagine, when in a deal of this size. Lastly, we believe that with our experienced board, our independent directors, we bring a different lens of scrutiny. And the sponsors see themselves as investors, not as promoters. So they welcome that scrutiny that comes with having a very accomplished set of independent directors. As you may know, in the Singapore context, the de-SPAC has to be approved not only by the shareholders, but by a majority of independent directors. In other jurisdictions, it is the shareholders and the board as a whole. Here, it is the independent directors who will approve them. Also, the founders do not vote their shares. And from a sponsor standpoint, these checks and balances, these guardrails, if I may say, that have been put in place by the regulators are very good, because that makes for a very sustainable, solid system as we go forward.
Okay. Now, you mentioned you haven't identified any specific companies at the moment, but you do have 2 years to do so with a 1-year extension according to the SGX listing rules. But what's your particular timeline to de-SPAC?
Quite frankly, Rachel, as soon as possible. And in M&A, having been doing this a long time, you never predict a date, because you can never know what can come your way. In my career, I've seen deals happen a lot sooner, few times, and many times they take a little longer. So impossible to predict a date, but our goal is to de-SPAC ASAP. And I'll tell you why, because we are not doing a portfolio company trade for sure, meaning we are not taking one of our portfolio companies and putting into the SPAC. And that's a principle that we follow across the board, because we feel we want to do a market transaction. Now, when you're doing a market transaction, it is truly a privilege and an honor to be part of the first round of SPACs. The reason is you have the whole ecosystem in front of you to be able to de-SPAC. And that's the reason why the first round of SPACs in the US did very well, is the ratio of potential candidates to SPACs, looking for those candidates, was skewed much more in favor of the SPACs. Today, as you know, in the US, it's a totally inverted market where literally everything is an auction. So we feel that we need to move fast to be able to consummate the transactions, so as to avail of the kind of exclusive period that we have in the short run. Long answer to a short question, but the idea is to do it ASAP.
And that said, this is your first SPAC here in Singapore, but after you de-SPAC, as you mentioned, as soon as possible, are you planning to do more?
Right now, we just focus on the IPO, get that done first, then do the de-SPAC. So we have no plans at all for anything other than the current deal we are doing. Let's see how it goes, to be frank.
I had a feeling you were going to say that. I mean, it's a very busy time for you. And I know it's been a very busy last few months, but I just want to rewind a little bit because as you know, SPACs are new to the market here in Singapore. Can you perhaps help us to understand and what to expect post-acquisition once you de-SPAC? What exactly happens then and what will be your involvement once that takes place?
So once the DSPAC happens, and we're going by examples in other markets, obviously, because this would be amongst the first SPACs and DSPACs in Singapore, is the two companies merge as a publicly listed company. And usually the majority shareholder are the shareholders who are already invested in the company prior to the merger. The SPAC IPO investors and the SPAC PIPE investors are the minority investors. A new board is put together that may or may not include directors from the SPAC. And a new chairman potentially can be put in place. And a business strategy that is put in place to help grow the company as a publicly listed company going forward. And one of the things we are very keen is to make sure that, being in a public market environment, the governance that is needed around a publicly listed company is far more rigorous than in a private environment. And we want to be sure that we have the right governance in place. So that's what would happen. And once the new structure is put in place, then it starts trading as a combined entity. There is only one unit of stock that trades at that point of time on the exchange. And you're like any other publicly listed entity at that point of time.
From your perspective, though, what are the advantages of going down the SPAC route in comparison to, say, looking at a traditional M&A?
From our perspective, the two main advantages. One is you can do private equity kind of due diligence prior to announcing the DSPAC, meaning we are private equity investors, we do deep due diligence. We have the ability to do deep due diligence because you're in the private markets at that point of time. And then, so in many ways, you're walking in with your eyes wide open. And we feel that's a significant advantage in helping create value down the road. That's one. From the standpoint of a company that is looking to perhaps de-SPAC is the surety of a transaction. The ability to work with an international sponsor group that has a very established track record of creating value for all companies and all shareholders, which includes Payoh Capital, LVMH Group, and having significant capital resources available, meaning the pipe that we put in place would allow for additional growth capital over and above the SPAC IPO proceeds. As you know, the SPAC IPO proceeds go completely into escrow till the DSPAC is announced. So it's the SPAC IPO proceeds, a potential pipe put together, and it's in the potential pipe that the sponsors have committed 40 million Sing dollars, unconditional 40 million Sing dollars. So for a high growth company, that's a significant source of capital while getting a well-established international group to help create value going forward. So I think it's an attractive proposition for both sides for the right DSPAC candidate.
Wonderful. Well, you've shared with us what you're looking to, the type of company you're looking to acquire, your journey to getting to a SPAC, and why a SPAC. Is there anything else you'd like to share with us today?
I think, in my view, having watched the evolution of the SPAC regime in Singapore and being involved in the consultation paper that was put together more than a year ago, and commenting on that, I think the framework that has been put together by the SGX is a very solid one, simply because there are very strong guardrails put in place to protect the retail as well as the institutional investors. There are many features in the Singapore rules that are much tighter than other jurisdictions. The minimum 3.5% of risk capital that has to be put in place. Of course, this sponsor group has put in 64 million over and above the minimum risk capital because they see themselves as investors and they're looking for partners. But broadly speaking, I think the framework that has been put in place by SGX is very good for a long sustained business to be set up, where we hope to see numerous SPACs come to market in the years to come. I mean, I was here. I'm showing my age. I was here when the first REIT was done, and from that time to today, where we are, we're a thriving REIT market. Mm-hmm. I think we reached a point where we hope to emulate that in the context of SPACs going forward. And I think the framework that has been set up by the SUX certainly is leading us in that direction.
Okay, well, thank you so much for taking the time to speak with us today. It's been an absolute pleasure speaking with you this morning.
Thanks, Rachel. Thanks for your time, and thanks for the invite, and look forward to keeping in touch.
Thank you. We've been speaking with Mr. Neil Parekh, CEO of Pegasus Asia. You're listening to Money FM 89.3. Money FM 89.3.